Hey, how's it going, aspiring traders? Welcome to the only penny stock trading guide you are going to need on YouTube. Yes, there is tons of information out there. However, can someone condense it in a few short lessons so you can learn penny stock trading as soon and as quick as possible? So without wasting any more time, let's teach you how to trade penny stocks. Let's go. Alrighty, so I just want to preface this video by saying two things. One, this is not going to be every little bit of detail you are going to need to go on there and trading penny stocks with hundreds of thousands of dollars and expect to make millions. However, this is going to help you get into the game of trading. Now, if you want more information, all you have to do is head over to link in a bio or go to profitchasers.app and then go to the education section. You guys get my entire course completely for free. It is even more in depth, or 10 times more in depth than this. This is just to help you guys get in the game as of right now. And the best part, it's completely free, no credit card needed. So I think you should go join our kick-ass community and trade alongside me every single morning. It's great to learn trading, but it's even better to have a mentor next to you, coaching you on exactly what you should and shouldn't do when it comes to trading, and have a kick-ass community like we do over at Profit Chasers. But without plugging Profit Chasers anymore, let's get right into it. Now, I quickly want to lay out the objective of today. So what we are going to do and how we are going to learn is, one, we are going to talk about my favorite theory, Elliott wave theory. This is going to be extremely advanced. I'm going to dumb it down. However, it has led me to making almost every single one of my strategies. Two, I'm going to give you the understanding or the advanced concepts behind candlesticks. So not only am I going to teach you how to read candlesticks, but the advanced concepts behind them. What do they mean? Actually, before we really get into it, we're going to be talking about broker, I guess, how to get into trading. How do you actually execute trades? And then we're going to go in at 3, and we're going to talk about order flow. And between 2 and 3, we are going to be talking about my most profitable strategy, the 5-minute pullback. Alrighty, cool. So now we have laid out an objective for today's lesson. Let's get started. So number 1, what broker should you use? Now, that is up to you. However, we do actually have a lot of options. Now, I do want to say that in the US, you are going to need at least $25,000 to take day trading on full time without any restrictions. How many of you guys watch this video have $25,000 you can lie that's lying around to test something new? Odds are probably not many. I didn't when I first started. Shoot, if someone asked me, hey, do you got 25 grand to try something new right now? I would probably say, up yours, buddy. So no, we do not want to use a US based broker more than likely. And I'm going to talk about that. Now, if you are outside of the US, you are more than chilling. You're actually at an advantage. But if you're in the US, you are going to be subject to the PDT rule. And you could look up more information on that. Basically, it means that you can only take 3-day trades in a 5-day rolling period, but basically 3-day trades a week. That is not enough. I take well over 3-day trades a day, sometimes way more. Now, especially the market we're experiencing. Now, so if I had to recommend a broker, it would be Capital Markets Elite Group or Hammer by Alaric. Hammer is the one that I use. They're both offshore brokers, which is going to basically allow you to day trade an infinite amount of times. You are not protected by FDIC, and you're not going to have that $250K protection, but who's going to have $250K in their account if the broker goes under? Hammer is not going under anytime soon, I can assure you. So I feel safe with my money in Hammer. Now, if you want a US-based broker, there's a few good options. Webull is decent. However, Webull is commission-free, and commission-free actually is not great because you're going to get subpar fills. You have TradeZero. These are decent ones. TradeZero actually is a commission-free and a commission-based program. And their short locates pretty good. Their fill's pretty good. Their charting's pretty good. So you got a lot of options if you are in the US and you don't mind the PDT rule or you don't mind a cash count, but this is not what the whole video is talking about. So for me, my favorite one is Hammer. And if you guys want to open a Hammer account, click the link in my bio. They are not taking on US clients right now unless you have a hedge fund like me, which we are working on a partnership soon. Without that, I would honestly probably go Capital Markets Elite Group. Quick disclaimer, I've never used them. However, I know traders who have and really spoke highly of them. So now we understand the importance of an offshore broker. Let's move on to candlesticks. All right, so we can cross off broker. Now on to the Elliott wave theory. Well, I actually have the slideshow. So now we completed the broker. The Elliott wave theory is the most important theory when it comes to day trading because as day traders, we are basically, in the simplest form, trying to figure out what the herd is thinking or what the herd is going to end up doing and try to capitalize off of that. Now, Ralph Nelson Elliott, an accountant in the early 1930s, developed this theory when he studied stock charts. And no, he did not have a broker he could look up and backtest on Zella and all that crap. He actually literally had to print out the time and sales and dot every single chart. So a lot harder. Now, basically, what he found was there was clear human emotion when it comes to money, when it comes to investing. There's 5 waves of investing. There is wave 1, wave 2, wave 3, wave 4, and wave 5. Now, because I'm a trader that trades alongside, I am going to want to focus on wave 2 to 3. And there's a reason. To put it in its simplest form for the sake of time, wave 1 is too risky because we don't know if the stock is going to continue higher or not. We can't establish our risk to reward. If the stock is just squeezing up, we don't know where we should buy it, where we should sell it. And wave 2, again, why would we trade a move where the stock is going down? We want to trade this when the stock is going up. The trend is your friend. But this pullback or wave 2 is needed because now we can clearly define and establish our risk to reward. So if we have, let me go up here so you guys can see it, or go right here. We have 1, 2, and the stock starts curling like this. Now we can establish our potential add spot, our risk, and our reward. Now that we have 2 moves, 2 sets of data points, we now can establish our risk to reward. We don't want to trade when the stock is just squeezing up like crazy. It is very hard to be consistently profitable doing that unless you were trading some sort of micro pullback. So anyway, so what's going to happen is the stock's going to squeeze up, it's going to pull on back, and we're going to add once it starts curling, and once it starts to break out and take the high of day. This is a very important indicator. When the stock breaks the all-time high or the high of that day, you should see a nice little squeeze. And we are going to talk about how to increase your win percentage doing so. Now, that in its simplest form is the Elliott wave theory. Now, what can you guess after waves 1, 2, 3, 4, and 5? Well, the stock is now so overextended, it is pushed up so much, it actually needs to pull on back, and that's actually when we go short or bet when the stock is going down. However, when you guys are first beginning, please do not short. You can blow your account so easily, as I have. We are not here to talk about shorting. We are going to just get you in the game of penny stock trading, and that is longing. Hopefully that makes sense. We have a 5-wave structure in the stock, and I'm going to show you some examples. Is wave 1, you don't want to trade because it's too risky. Wave 2 is a pullback. You want to wait for the trend to be your friend. Wave 3 is when we take our trade and go profitable. Wave 4 is when people start FOMO buying in and you're chasing the stock. And wave 5 can sometimes create a good opportunity, but it can often be choppy and have a harsh reversal and the stock is over. Or you guys are buying right here and then it pulls on back and you get stopped out, and that's when I start buying in, and then you get FOMO'd in, it squeezes up and you're like, man, I missed the move. And then you're thinking it pulls on back and you're like, haha, I told you so. That was a good thank God that I stopped out because it's going to dump here. That it squeezes higher. You buy back in because you want to, because you have fear of missing that move, and then it dumps and then you lose a bunch of money. How many times has that happened to you guys? Probably a lot. Red ones, which are the no-goes. You don't want to see red ones all the time. And then green ones, pretend this is green. I'm not colorblind. I just don't have a green marker. So green is good. Green means the stock is pushing up. Red is bad, which means the stock is going down. Now, what happens here is if we have a stock that is, or a candle that is green, we have something that looks like this. You guys might be like, what the heck is that? Well, this is what a candlestick looks like. A stock candlestick is. This, within the time frame of it being traded, say that this candlestick is a 5-minute candle. You're looking on the 5-minute time frame. This candle now has 5 minutes of data between the very first minute starting at 9:30 a.m. EST, which is when the market opens, and then between 9:35. So this is all the candlestick is showing previous data of what happened within the last certain amount of minutes within a given time frame. Now, there's 2 main parts when it comes to a candlestick. There is the body of the candlestick, which is the thick part, and then there are the little lines, which is the wicks. You can see on my screen up here as well. And all we have to do is understand that when the last candle was printed, for example, say there was a candle like this. This was the previous candle. This was 925, 930. The next candle starts right where the last one ends. So the bottom of the body of the thick part or the square simply says this is where the candlestick started trading at the very second the clock strikes 9:35. Then the stock pushes down a little bit. It starts red. And then this is actually the low or the the lowest the candle ever got within the last 5 minutes. Same with the wick up here. This is the highest the candlestick has ever got in the last 5 minutes. And then this is where the candlestick ended up closing for the next 5 minutes. So the next candle is going to start right there. Makes sense. I don't want to take too much time on this because there's a cajillion videos on YouTube on how to read a candlestick. Go watch them. I have them up there. Other traders have them. But I want to talk about the advanced concepts behind them. We have the strong candles, where basically there's no wicks in the entire. They can have little wicks, but majority of the move was within the body of the candlestick. We have candlesticks that have long wicks that end up looking like a hammer, and we also have inverted hammer ones. So this is how I know when to buy and sell a stock. It comes down to the most important thing is where are the wicks within this candlestick. Now, all I'm going to tell you is the longer the wick, the worse it can get for a certain direction. Let me explain. For example, if there is a stock that we'll just say is pushing up and there's a huge move to the upside, but then somehow so much selling pressure happened up there and ended up closing like this. There's a huge wick, so which means the stock was up there in the last 5 minutes, but ended up closing down here. What do you think is going to happen to the stock? Do you think it's going to kind of retest it like this? Well, no, more than likely not. The thing about having elongated wicks is it shows that the stock is due for a correction. When you see an elongated wick like this, what ends up happening is it shows traders that this stock is starting to be weak. The reason being, we pushed it all the way up here, but then it closed down here. Could it hold its move? As a trader, that's like seeing your old favorite NFL running back make insane yards per game. He used to run 10 yards per carry. But recently, every time he gets to the line of scrimmage, he's just getting sacked and he's really not making any distance. And what's going to happen to his valuation as a player? Well, if he's not helping out the team, it's going to go down, 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 down. Just like the valuation of the stock, it's going to go down, 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 down because that's showing weakness. So these are candlesticks to the downside. The stock ends up pulling on back. Just like the upside to save time is the exact opposite. If we see a stock that was dropping dramatically and there's a big wick to the downside like this shows strength that buyers actually came in at this area and want to push the stock back up. So generally speaking, you are going to see a stock do this and continue higher. Make sense? Good. I don't want to waste too much time on candlesticks. That is done. Now, going over the 5-minute pullback, which is my most profitable strategy. Alrighty, now on to the 5-minute pullback, which is my most profitable strategy. Now, you guys already know what the Elliott wave theory is, so we understand the 5-wave structure, and you also know I like capturing this move and the reason for capturing this move. Now, all I look for is a stock to push up. Again, we don't trade the first wave because it's too risky. It climbs, it climbs, it climbs, and then eventually it starts to have a little bit of an inverted hammer candle like this, so we know it's going to pull on back. So then what ends up happening is the stock pulls on back, but there's still some room left in the tank. The stock should still continue higher. Now, what ends up happening is the stock pulls on back just a little bit, hopefully not too much, because if it pulls on back too much, it becomes untradeable, and then fresh buyers kick in and say, wait a minute, I still like this stock even though it pulled on back. It continues higher and then eventually takes high of day and rips. And we like trading this opportunity. We love trading this opportunity. So the reason why I love trading this opportunity is we can clearly identify our risk, basically where we should cut our loss. We can clearly see that the trend is indeed our friend and is continuing in our direction. And if it takes high of day, we should see a nice squeeze. Now, there are some variables that I'm going to go over at the end and talk about to increase your win percentage within the 5-minute pullback. However, if we get a stock to move to the upside, pull on back, and continue higher, we are going to trade it. And here are some examples. We have an example right here. You can see the stock moved higher, pulled them back, took high day, and then squeezed. We have another example right here. There's a small pullback. We have a failed example right here, which we are going to go over. And we have another solid example right here. Now, real quick, this is the 5-minute pullback, which means every candle should be on, you guessed it, the 5-minute time frame. Okay, and I'm going to show you one live after this so you guys can see what it looks like. Now, all I do and all I look for is, again, a stock to meet my criteria. Well, how do I find stocks to meet my criteria? Good news for you. At ProfitChasers.app, we give you guys a scanner completely for free for 14 days. Every stock that hits that scanner is actually stock that I would personally trade. And to make it even better, I break down every single trade I take inside of our live stream, you guessed, on Profit Chasers app completely for free. You get our education. Not only do you get our scanner and our live streams, you also get access to all of our chat rooms and all of our text alerts. Whenever I find a stock that I like, I'm going to actually text you guys right in your cell phone so you can watch it with me. Alrighty, back to the video. So when the stock starts squeezing higher, we'd like to see around a 50 to a 100+% move to the upside. Anything much past 100%, the stock's more likely going to pump and dump. Anything less than 50% might not be worth it because the risk to reward, again, might not be worth it given the fact that the trend might not end up being your friend. So let's just say that the stock has a 75% move to the upside and it pulls on back. To increase your win percentage, we see this bottoming wick candle that has a hammer. We know that if we see this, odds are the next 5-minute candle should increase. The second I see a bullish engulfing candle, which means when a candlestick makes a new high from the previous candlestick. So for this example, let's just say it's this line right here. Once this candlestick gets above the previous candlestick and starts actually making higher highs, I'm going to add. And then my second add spot is just before it breaks out, before the high of day break, the HOD. The reason why I add just before the high day break is because I like to add with anticipation of things breaking. Because if it fails and pulls on back, I have a lot of wiggle room to potentially stop out in or cut my losses on, as opposed to adding on the breakout. Unfortunately, when you try to buy for the breakout, you'll get filled way up here because of the order priority to have your order in time, and then it pulls on back and you get screwed. So I like to add just before the breakout a few pennies a share in case it doesn't break out, which not all stocks end up breaking out. So let's talk about risk to reward real quick and the reason why I love this trade. Well, say we have a strong move to the upside, the stock pulls on back, starts to continue higher. So my risk is always the bottom of the move. I always risk the bottom of the move. So in case it doesn't have a stock candle like this and actually starts to print down like this, I stop out once it makes lower lows after I add. That's number one. So given where I potentially stop out, I always like to identify my risk first. What am I willing to lose, potentially make in this trade? Because risking is easier to identify than what you should reward in this trade. So if I bought right here once it made a bullish engulfing candle, and say my average was $1.05. Well, and below this move was 98 cents. Well, there's a few things. One, there's a psychological level out. So I am risking 7 pennies a share. Now, if high of day is 120, I'm going to take this trade because I am looking at buying it at 105 and maybe adding at 115, 118 for a squeeze past high of day and up to my next price target, which eventually might be 125, 130. However, we can talk about that later. The reason why I want to know where high of day is because if I'm risking 7 cents, so potentially minusing 7 cents, I want to have double the reward. So for every one trade I lose, so if one of my trades goes green, I can afford 2 losses. So if I'm risking 7 cents, so then I want to gain 15 cents, right? Or 14 cents. And if my reward, say my add spot was right here, and I'm rewarding here or above it, I should be looking at least 14 cent a share gain. So my reward should always be at minimum double my risk. Make sense? Cool. Now, where do I sell it? Well, I always look for psychological levels, number one. So if the stock is squeezing up, you have to understand what is the price of that stock. Now, here's a cheat sheet for all psychological levels that you can look at to take profit in. You can screenshot it, do whatever you want, but make sure you are averaging in and averaging out. Again, I said I like to buy hypothetically right here and then just before high day right here. 2 buy-ins. I don't ever usually go just 1 buy-in because odds are you can frick up your 1 buy and mess up the whole trade. If you're splitting your buys into 3 or 4 different buys, odds are you are going to do better at averaging in. Your trade isn't going to be botched because you have more entries to pull from. You have an average of some good entries. Just like exiting, if we have a stock that is squeezing like this, we want to sell a little here, sell a little there, sell a little there, and there. Now, how do we know when to start selling? Again, go to the psychological cheat sheet, okay? Or, which brings me to my next point, look at the order flow. If you guys want to know actually how to trade order flow to a T, I'm not going to go on every single little detail in order flow. Click this video on my YouTube channel and go watch it. I'll recommend it. But I'm going to go over what is order flow so you guys aren't confused. The reason why I love penny stock trading is because I can identify order flow, and you can't see that on Forex, which is why I never recommend trading Forex. So I can actually see when someone is coming in to buy a stock and how much they're buying and at what price they're buying. See in this example here, shrink my face cam. In this example, you can see that there is a 10,000 share seller at 1048. Which simply means someone's trying to sell $100,000 of stock at that price. Now, that might not be a huge order for some stocks. However, that can be a big order for some. Now, for example, if you see that, say 100,000 shares, and that's a $1 million seller at that level, you need to look to get out in. Now, this is going to come with time, understanding what is a big order and what isn't a big order. Usually, if the stock is over $5, anything over 5,000 shares is a decent order. Anything over 10,000 shares is usually a big order. So that's going to come with time. However, watching your level 2, which is what it's called, your level 2 shows you the order flow. You guys can see what people are buying and what price they're buying it. And where they are planning on selling it. This is super huge. Not many people do this, which is crazy because this is literally how you make money. If there's a big buyer coming in, you're going to want to buy because that's going to help squeeze the stock up. If there's a big seller coming in, you are going to want to sell. But if you guys want a complete understanding on everything order flow, go to ProfitChasers.app, go to Basic Concepts, and look at how to read level 2 in our education. Again, completely free. Alrighty, let's do it. Alrighty, so now that you know how to read order flow, that is the basic understanding of trading. You guys know what broker you need to go with. You guys know what the Elliott wave theory is. You guys know how to read candlesticks, or at least I hope. You guys know what the 5-minute pullback is. Again, I have a 3-step, extremely long, in-depth video on my software teaching you guys exactly how to trade it and how to increase your win percentage in that field. And it is completely for free. You guys should go do it. And if you guys want to watch me trade it live, you can also do that right at market open at 9:15 and 9:30 a.m. EST. And we usually go live all the way to about 10:30 or 11 a.m. EST and capture some awesome moves. Well, guys, that's going to do it for today's video. Hopefully, after I edit this down, I can make it short and sweet and to the point. Is this going to turn you into a profitable trader? No, it is not. There's so much more to learning. However, this is to get you guys in the game, to learn the basic understanding so you guys can start trading a little bit. Take that first step in trading, if you will. Again, if you guys want to trade alongside professionals, it's not just me, it's 5 of us every single morning. Some of us have been professionally trading for 12 plus years and have collectively made over $1 million in trading. All you guys have to do is, again, click that link in my bio, get access to a ProfitChasers.app, which comes with a scanner that shows you guys exactly what stocks to trade and sifts them out throughout the market. You guys get access to our journal so you can track your trades and see how well you're doing at trading. And you guys get access to our live streams, our chat rooms, our custom charting, and a whole lot more. So if you guys want access to all that in our complete small cap trading course, click the link down below or go over to ProfitChasers.app. Click that subscribe button for more educational videos like this. I'll see you guys in the very next one. Deuces.